So I want to get right to our next guest for a wide-ranging discussion on the markets, tariffs, tech uncertainty, investing in AI, the IPO market, and so much more. Investing in America, what kids might be able to do. We'll talk about that in a moment. Brad Gerstner is founder and CEO of Altimeter Capital, a leading tech investment firm with notable investments in NVIDIA, Tencent, Coupang, Amazon, Meta, Snowflake, and others. Though, interestingly, sir, you have lightened the load during this uniquely maybe uncertain time. So well, I mean, ahead of this.
We started the year. First, it's great to be here.
It's nice
I even put on a tie for you.
Thank you.
Got rid of the black T-shirt for the day. We started the year markets at an all-time high. We had seen a big Trump bump coming out of the November election. And when you listen just to the words of the president, we knew this was going to be a big period of transition. Right? We were going from a period of 4 years of $2 trillion deficits, massive fiscal stimulus, massive monetary stimulus, and we're going to delever the economy. Right? He talked very openly about the tariffs, right, more reciprocity, fairer trade, talked openly about the fact we're going to have some level of austerity with Doge, et cetera, that we'll get into today. Periods of uncertainty. We have high economic uncertainty, high political uncertainty, and high technological uncertainty.
And high multiples.
Right, at all-time high multiples. So there's only one thing that can happen. Discount rates have to go up, right? Risk premiums have to go up. And when they do, multiples come down. So for us, that was just a period to say, okay, we'll go to the sidelines. We'll wait this out a little bit. We've seen the markets come back in. And I have to tell you, we were buying some yesterday because now you see NVIDIA at 18 or 19 times next year's earnings. Now you're getting paid. You have a margin of safety.
So here's the question, though. Do you think that the uncertainty, I would argue, the uncertainty does not feel like it's over unless you think it is?
No, listen, the market now is firmly ensconced in understanding that we're in a period of uncertainty. So I think about the first 10% down, Andrew, which I think the NASDAQ troughed it down 14% yesterday from its peak, okay? The first 10% is just digesting the fact that there is more uncertainty. This week was the first week where I saw a banner on CNBC that says fears of recession. Mm-hmm. So the second 10% really is about growth and recession.
And where are you on that score?
So I think the handoff between these two policies, right, can be messy, and it could tip us in to growth concerns or recession. We heard Delta warn earlier this week. We heard cautionary comments out of Walmart. So I don't think we can, go slowly through this transition. I think the economy is fundamentally sound, but I think we need to get clarity around the tariffs. We need to get clarity around taxes. We need to get clarity around reconciliation and Doge. I think the president's going to lead us in that direction.
But just to clarify, you were speaking pretty publicly about this back in early February. I know you had a podcast where you talked about those things. Did you sell stocks when you say you stepped to the sideline?
Yes.
So you sold a lot of the positions, and now you're starting to.
So we took down our gross exposure. So that's our longs plus our shorts. We took down our net exposures, really to kind of the bottom decile of exposure that Altimeter would normally have. Again, it's just in the too hard bucket, as Warren Buffett would say. Yeah. It wasn't because we thought we were going to fall off a cliff, but we were concerned that this could be more messy than people thought. Because the magnitude of the change is bigger than people thought.
What would you buy with both hands in the NASDAQ? What you would think is, wow, this is dirt cheap? 20%, 25%?
Off the peak?
Off the peak.
Oh, well, again, it's all fact and circumstance dependent. If we're heading in a positive direction fundamentally, which I think we are, right? I think we're heading in a pro-growth, lower regulation, fiscally more responsible direction.
On the other side of this.
Right. And so when you're off 20%, to me, that's probably a huge buying opportunity. Because remember this, Joe, as of yesterday, the average stock in the Russell 3000 was down 30%. Yep. The average stock. Most stocks in the NASDAQ I was looking at were down 20 to 40%. So, yes, the index was only down 14 because of the Mag 7's weight in the index.
So timing is a dangerous game. But the question is, to the extent you think this continues to be messy, how messy is it? How much more is there? And to the extent there's some people who are sitting around going, you know what, the knife is falling, I'm going to let it continue to fall.
The mess could be.
That's the opportunity.
Right.
But the markets bottom long before the mess stops.
Well, no, but that's the problem.
Like during the pandemic.
But you said the next 10% would be from growth.
You're suggesting that there is another 10%.
Well, listen. The future is a distribution of unknown probability. So there, of course, is a probability, right? There's a certain distribution that we're going to go further down. Okay. And let me give you some scenarios, maybe a framework to guide how we're thinking. So first, the president said April 2nd is going to be a big day. Howard Lutnick has come on here and said April 2nd is going to be a big day. We're going to announce the reciprocity tariffs. So I think we have to wait and see. We have to wait and see what that is. Now, the question is that the start, Andrew, or the end?
Right.
Right? If that's just saying, you know, we think the Europeans have $2 trillion of non-tariff trade barriers against the United States, and we're going to impose very high tariffs against the Europeans, then it's more like a start than an end.
And the Europeans are already making noise this morning to say that there would be reciprocal tariffs to our reciprocal tariffs.
Correct.
If that's what.
So I think, listen, on the tariffs issue itself, if you believe that we're heading in the direction, I see Peter Navarro come on here sometimes, I think he's great. But if you think we're heading in the direction of high structural, permanent, McKinley-style tariffs, then we have further to go down. There's not a lot of support on capital.
What do you think?
Right? So I don't. I fundamentally think that, you know, the president is negotiator in chief. He likes to keep all of us off balance. He likes to keep all of his negotiating counterparties off balance. I think it's probably a pretty effective negotiating technique. In order to do so, he has to make you believe that he might actually impose super high protectionist structural tariffs. But at his core, I think he's a free trader. At his core, I think he wants to make deals.